Recording. There we go. We messed that up. Perfect. Still working out some of the technical difficulties here. So we'll work through kind of some of the intros real quick. My name is Cory King. I'm with the Heartstrong Home Group here at Keller Williams West Knoxville office. We certainly specialize in luxury properties, commercial, and then I'm kind of taking on the investment division just as something that I'm pretty passionate about. What we're here to do, really why we run this group, again, this is just something that I was really passionate about. So we had the opportunity to partner up with the guys there at Grid HQ in order to be able to bring this to our market, just as a way to really just create a collaborative environment where we all are able to share ideas and mastermind and network and grow, because that's really where the power is at the end of the day, right? No one succeeds alone in this. And so it's something that we're here to do, is just to bring the opportunity for everybody just to learn and grow together. Certainly that's what we're looking to accomplish with that. How you can connect with us is certainly just through our Grid platform. I know there's a messenger way that way. And then we'll also make sure to share all of our contact info. So for those that are here online with us, go ahead, kind of jump into the chat section there and just put in kind of your info, and we'll be able to make sure that we share all that around so that we're able to really all network together. I want to take some time here, just kind of go around the room here in person, just for people to kind of a little bit about yourself, kind of a 20-30 second elevator pitch, if you will, just kind of who you are, what you're into, maybe what you're looking for. If you're looking for a specific thing out there, now's a great time to say it, because somebody might have that deal or know of someone, vice versa. I mean, if you have something like that, that would be a great time to share that, and maybe just a little bit about what you're looking for out of the group. We'll start around Robbie.
Hi, I'm Rob Howard. Been with Keller Williams
You have to.
for years. Was a member before that. That's how I got into this thing. Over the years, I've bought and held for at least a period 20 homes, single family. Never bought one yet. What am I looking for? I just wanted to support Justin and Cory, as well as new cool people that have.
Very cool.
Glad to know you.
Very awesome.
My name is Zach Schroeder. I'm a new agent. Most of the clients that I've been working with are in Sevier County, short-term rentals and investment properties like that. So I'm just kind of looking to learn about just different ways to invest in this.
Right on. Good stuff. Yeah.
My husband and I started out as investors. We buy and hold and we fix and flip. We 1031 into multi-units, so doing a little monopoly there. We are looking for properties all the time, multi-units, fix and flips. We've got cash, we've got investor partners. So if anybody has anything, bring it to us.
What are you?
Oh, I'm Deborah Crines. Oh, that part. Going right into it. And I'm here to support Cory and Justin, as well as get out there and start networking. Excited about this new group and all the information that we brought to the table. I'm also an investor with Keller Williams and opened up the office in Sevier County and work with a lot of people around the country with short-term rental investment properties.
That's awesome. Good stuff.
I'm Amy. I'm new with Network.
Wonderful. Glad to have you.
Okay.
Yeah.
My name is Adrian Hall. I'm in working with mortgage. I lead one of the largest mortgage in the area. Been in finance for about 9 years. I started doing investing by renting out our primary residence. Started house hacking for a while. When he got too good, sold that. I am trying to grow my overall personal portfolio. I have a couple of houses. I know a lot of people in this room have 5 times as many. I don't know if I want 5 times as many, but I want the option. So that's why I'm doing.
That's awesome. That's good. That's great stuff.
I'm Bobby Lewis. I'm from the Atlanta area. I'm friends with Justin. He invited me out to this.
I'm actually the owner of an addiction treatment center. We're going to be opening up here in August. And the reason I'm here is because I need multiple properties to rent for use of the treatment center to house our clients. I plan to start off with 2 houses and double that every year until we get to about 10. And they would be long-term rentals. My counterpart in Nashville owns a similar treatment center, and he spends $100,000 a year in rent. He has one landlord. That sounds great for both parties. And that's kind of what I'm trying to do here. So,
That's cool.
Because they've been selling off. They're in Knoxville. They've been selling off a lot of their multi-family, small multi-family places for some units.
Gotcha.
That have historically done.
Oh, cool. Okay.
That's awesome.
Hi, I'm Steve Levine. I remember to do the name first.
Great, Steve.
I moved here with my family from Florida about 10 months ago.
Very cool.
I do private lending.
Yeah.
I've been doing that for a long time. It's something I did more as a side thing, and it became just something I wanted to do full time. I guess the reason I'm here, well, first of all, being in Knoxville, awesome.
Sure.
People here are very, very nice, very friendly, much more genuine than where I come from in South Florida.
Yeah.
Probably not a surprise to people, especially people that come from other places. It's just a good opportunity to network a little bit.
That's awesome. Good stuff. Welcome.
I'm Brian Kimball. I'm a loan officer by trade, a transplant here from California. And we left there, sold our real estate, and we're looking to get into some commercial investments here.
Okay.
Want to support local business and grow it.
Good stuff. That's awesome.
I'm Karen Calloway, and I'm here to give a really great pitch at the Power of Me, which I liked.
Yeah, thanks for coming.
So I am an agent, Keller Williams agent. I work out of the Beer Market Center. So I'm interested from an agent perspective. I do a little bit of investor business.
Right.
Galtenberg cabin business,
Sure.
which is a kind of new to me. But actually, I'm really here to get some education from others.
That's awesome.
Just having some properties.
Yeah, no, it's a great exit strategy, I think, for real estate agents, right? When our work is such one-to-one transactionally. Right, yeah, exactly. Positioning yourself to take that income that you're generating as an agent and putting it into something that's going to sustain you long term. That's awesome. Welcome.
My name is Justin Myers. I'm a community manager for Great Knoxville, director of sales for our Archibald Group. So a couple things. I'm personally looking for, I've got too many student loans, so I cannot qualify for a conventional mortgage. So I'm looking for seller financing. Everything else is great. Well, that's the goal for the end of the year is to find that. And I'm looking for a space for Knox Pride. Knox Pride is looking for a permanent home, so they can manage commercial real estate or know of anyone that does. They're looking for a community center, and they can put down a significant amount of money. Prepay like 6 months. That's the 2 things I'm looking for.
Nice. Good stuff. Good stuff.
So I'm Lanny Gates, investor, small business, construction, primarily buy and move. Just program first new construction, spirit.
Nice.
I'm looking for lots and spirit. So
Nice.
it's my nephew. I just drove with me trying to get him into the investing side of it. So he's here.
That's awesome. Good stuff. Well, thanks everybody for kind of showing up, and great to hear everybody's kind of goals at the end of the day. We'll kind of start diving into this. Certainly there's some legal mumbo jumbo. If it all goes wrong, don't sue me, bro. We're here as just a meet up, just to understand. Certainly we're all here kind of pass around advice, but certainly if there's anything specific, just seek out those well qualified in their field. If it's a real estate attorney or a lender, things like that. You just want to make sure that you're going right to the source at the end of the day, right? So I just wanted to make sure I have that.
This is not
Covered.
professional counsel. The state of Tennessee wants us to be very clear as real estate agents that we are not attorneys, we are not tax professionals, we are not home inspectors, we are not financial advisors. So give good common sense advice, but verify. It's not just-
Yeah.
You want a professional, we know lots of them. You can push them.
but go that direction. Yeah, correct, correct. So let's get down to it, right? Just what is a buy and hold? A buy and hold is going to be a property that you're going to purchase with the intent of owning for a long time. So don't think of it as something that you're necessarily going to hang on to for maybe a year, 2 years, 3 years, things like that. This is a long-term play at the end of the day, right? So versus kind of a flip or rehab project, which some can enter and exit in around, I don't know, 3 months, 6 months time, maybe upwards of like a year, but that's going to be your quick turnover property at the end of the day. So we're just looking for an income producing property or a rental property. Considerations, things to look at a buy and hold, they are different from a fix and flip, yet several of those conditions are going to be the same at the end of the day. Things to consider just right off the bat, certainly it's just how much cash do you have to play with? If you don't really have a lot of money on hand, you might be starting out in the fix and flip world, perhaps wholesaling. Wholesaling is where you're going ahead and getting a property under contract, and then you're assigning or selling those rights off to someone else, and then kind of making a profit margin there in between. That's oftentimes where a lot of people start off, just as a way to kind of build up some cash, where then they can go and leverage into a rental property. Later on, we'll kind of do a little dive on a sample deal, just where we can kind of analyze those numbers, so we see maybe if this property does or doesn't make sense, right? Understanding just what's your longer term strategy of real estate investing. Are you looking for instant income and cash flow because you just want to be able to stop working right now? Or is it something where that might not be a big concern of yours at the moment, and you're just looking for something that's going to be paying down the money on that property, the loan you might take out, and then be able to have that as a long-term hold, where in 15, 20, 30 years, that property is long since paid off, and now you've got a substantial amount of income coming in passively. Sort of just another thing to consider. Just what's your tolerance for risk in this business? So certainly with any form of investing, be it in real estate or the stock market, you're going to have some risk involved into there. So just knowing, I guess, what is your ultimate goal, and for this, what are you willing to stand? Because certainly, I guess, when it comes to a rental property or a buy and hold, you're going to be dealing with things a little bit more so, a little bit more people involved, I suppose, than you would on a traditional fix and flip. You're still in sort of a chain of title, but when it comes to a hold property, you might have to buy it and do some initial rehab work. Overall, you're dealing with contractors, any tenants and tenant related issues, any buyers that you might be selling off to later on, and certainly agents that maybe they might be bringing the tenant into that situation. Property managers as well are another piece, and we'll kind of get into the property management piece later on. I guess some things to consider as well, just where do you want to do this? Are you someone who's focused maybe more in your own neighborhood and you want to keep things close to home for peace of mind? I know there's people that invest across the country because maybe the numbers and the margins are a little bit better. Those people have a little bit higher risk tolerance because they're willing to invest their money a couple hundred, couple thousand miles away. So it just, again, goes back to what is that risk tolerance that you have at the end of the day. How long do you intend on keeping this rental? Again, ideally, you're looking to hang on to this for, I would say, 10 plus years. If it's anything under that, then maybe you should be shifting focus into the flipping world, that kind of thing. Maybe it's the short-term rental market as well. Those margins kind of work out where you can make a good sum of cash and then exit out of that. How are you going to manage it? If you're all gung-ho and you want to manage your own properties, certainly that can be done without hiring and leveraging out a property manager. Although I personally always like to just hire that out for just, I don't know, just peace of mind, really, to know that there's going to be somebody else there to help with that. But that is going to eat into your margins at the end of the day. So some people will tend to manage their own properties up to a certain number. And then at that point, you're either looking at this is going to become a full-time job, right? Or I need to bring in some leverage and hire a property manager because I don't want to make this a part of my everyday process to go about it. what rate of return do you want? We see an average appreciation since they've been tracking it of about 4.5% year over year. Now, certainly over the last couple of years, our market has seen more than that overall. But historically speaking, you can kind of expect to see a 4.5% appreciation on that property year over year. Good news is on the tax side is you get to appreciate that as well. So that's certainly a benefit of it. And then just what rate of appreciation do you expect to see it? Again, that's just kind of that 4.5% year over year margin. I think I maybe misspoke when I was looking at just kind of your rate of return on that is maybe just what's your cash on cash return when you're just first going into a property. How much money do you expect to receive on an annual basis based on that money that you initially invested into it? I'd kind of like to ask around the room just some people that have current rental properties, just sort of what they're into. You like it more in your neighborhood, or you want to go outside? Leaving it kind of open to a degree, I guess. I mean, Robbie, I'm gonna go with you. I know you've had a couple properties
Yeah,
before.
we've already talked about, I moved from one side of town to the other and called myself not going over to keep an eye on the properties as much. To me, I really want to own within, 15 minutes of my house. And I think that's for more of a niche person that doesn't, whatever. I like running into my neighbors or my tenants at the grocery store because I judge, so my tenants are all cool people.
That's
I know
cool.
that's kind of weird.
No, that makes sense, right? You've assessed it where you like to keep it within a certain radius.
Yeah.
I mean, I've got a particular client who buys only in his neighborhood. I mean, he's got to be able to walk or ride his bike there. He's got probably 4 or 5 houses, including his own. But that's his niche. He only buys, for those familiar with Knoxville, in Oakwood Lincoln Park, just a neighborhood in North Knoxville. He only buys in that neighborhood. He only buys up to about $100,000 or less, because again, he's going to want, like, ideally look to go in, buy it, fix it up a little bit, and then kind of keep a longer term tenant in place. But I know the people that invest way across the country. Adrian, I'm curious, kind of, are you a niche person or are you spread out a little bit?
Right now, I'm niche. I have a preference to high private ownership areas.
Yeah.
Where there's very few homes that are in the entire area.
Sure.
Like, 2 houses I have, they're the only rental properties on the entire street. They live side by side. So everybody goes around, they've lived in years, they've taken care of the house, they've bought holiday before. And so my tenants see this area.
Nice. Well, that's cool. I can appreciate that. I would say, oddly enough, so I'm currently living in what is going to be my next rental property. As I'm renovating one house, I'm going to be moving. And oddly enough, of the 6 houses in that cul-de-sac, I'll be number 4 that's going to be a rental. So if my neighborhood is one that is, I wouldn't say a majority at this point, because there's about 72 homes, but 15% of the homes in that neighborhood are actual rentals. But I like it. I'm already going to be on the hunt, I think, in my own neighborhood that I'm in now, because it's a pretty stable spot overall. And we'll kind of do some dives into maybe how to identify those neighborhoods or what you're looking for overall. So I mean, just in that, right, is I guess personally preferring kind of low to middle market properties. It's kind of tough to make your money on the higher end because the costs just aren't the same. So thinking you're going to maybe buy $1 million property, there's certainly a floor in the rental market in terms of what people pay, and there's certainly very much a ceiling in that as well. So buying $1 million property that's going to cost you 10 grand a month or around that range to hold that thing, likely probably not going to get that kind of return on that property. So kind of personally prefer the lower to middle range of market. Those are people that are going to be staying there for quite some time because they're looking to either keep their credit good or they might be in a rebuilding process. Yeah, so high-end property is kind of nearly impossible to find those margins. Lower end of it, certainly there's people that have a niche for that. But I would say, again, you might just have more turnover in that aspect. Maybe those people just are not looking to take care of your asset as much as you might like. And so that's where we kind of prefer this lower to middle end of the market, because you're going to have that continual sustained renter, ideally over time, because certainly when you're doing a turnover on a property, that's where your margins get a little bit tighter. Yeah, Justin.
Yeah, but we also did want to share, you did kind of get that perspective in terms of diversification.
We prefer doing the county. We don't-
Yeah.
We don't do. Really, we've got a couple of single families left, but we've turned a lot of our single families into triplexes. And we're looking to continue that triplexes up to maybe 4 or 6. Maybe a little bit higher. You know, you start to venture out into your comfort zone. We've been doing this for 12 years, so your comfort zone starts to get a little bit, we're ready to expand and kind of go out of those boundaries. But we definitely like to stay in the county areas and more.
You focus on an individual neighborhood, like, or like what city, this, or is it
No.
want to be?
We'll probably do up to an hour right now. We have started actually because we want to start traveling more. So we are starting to look at different areas like Florida and,
Sure.
you know, maybe some of these other areas where we thought, you know, maybe we could make that work for us. We like to go down there anyways.
Yep.
So, and we're also going with the idea of getting into the overnight market.
Okay.
Which
That's
I haven't been in.
I can appreciate that. If I might ask, Deb, so when you specified kind of preferring county over city, do you mind kind of elaborating on that just for a second in terms of like, why is it like tax purposes? I mean, because there's certain, I guess some.
There's several things. One of them is taxes.
Yeah.
The taxes are going up in Knoxville a lot, and that hits your bottom line.
Yep.
And so we've said, look at it. We can save $1,000 just by being over on this line. And so that was one thing. And another thing is that when, especially when remodeling, there's less city regulations and a less
I can appreciate, yeah.
people scouting out to play you.
Yeah.
So if you knew my husband, you could appreciate that's not a good thing. So yeah.
Oh, that's cool.
Mhm.
Open up. You say you've got a couple properties, so
Yeah, I've got quite a few.
Yeah.
I'm pretty open as long as members work.
Yeah.
Spread
Yeah.
out, probably an hour from Maryville, from Spearville, I've got a lot of Knoxville. If I could keep everything in Maryville, that would be great.
right.
I'm not able to scale the way I want to scale.
Sure.
If I were only doing 5, 10 properties, yes.
Yeah.
You know, there's just not enough properties. Making them work. So, and I've ventured out to Sweetwater. Pretty spread out.
Wherever the dollars make sense,
Wherever it
right?
makes sense.
Like, yeah. I can appreciate that. That's all good, right? So that just kind of goes more into just, you got to have a risk tolerance, know where you want to be at the end of the day with it all. Certainly on these properties, I guess we're not looking to just go in and ideally just gut the place just because we have our own interior design fantasy. We just want to live, right? We're going to go ahead and just fix what's broken, try to avoid any kind of gut job renovations unless the property just really needs it right off the bat. And at that point, sure, then you might make an investment in putting maybe a lower end granite countertop, because that's certainly a product that's going to not only probably get you a little bit better rent margin at the end of the day that should make up for it, but it's also a pretty durable product that's going to stay there for a long time. Painting the cabinets before we're just replacing it, scratch and dent appliances are always a great way to go. Carpet and vinyl in most rooms. I would even say vinyl as many places as you can, just to avoid having to replace that carpet every couple of years or every time turning that property. And that product now, I mean, I'm in Floor and Decor, seems to be on a weekly basis right now. They're pretty inexpensive comparative. Only exception, I guess, just if the place just really needs the full renovation anyway, then just go with the nicer materials on it all. Stainless steel appliances, again, scratch and dent. Nobody's going to see a little dent on the side of the stove when it's between the cabinets anyway. So it's certainly a pretty safe spot to be when it comes to updating these properties. We can talk about property management a little bit. Those that choose to use a property manager understand that they are going to be taking a certain percentage of your rent each month, usually 8 or 10% of that gross rent, and some will charge you, maybe it's half a month or a full month's rent up front for finding and placing and vetting that tenant up front. Certainly that's work you can certainly take on if you're looking to save on that cost a little bit. I personally would just as soon hand it over. It's well worth it, in my opinion, to just go ahead and hire that out. But I respect those that might have their own strategy with going about it. Should expect to get a good detailed monthly report, definitely annually, on that property if a property manager is managing it for you. That way it's something that you can see, this is what my expenses are when it comes to managing the property, this is my income that I got overall, and then it's something nice that you can just take right from their hands and hand it right to your CPA and your tax accountant, and it just makes that whole process a lot smoother versus diving through all that paperwork and then having to put it all back together. That's again personally why I like property managers, because they can just hand me that and I can hand that right to my accountant and it's done. I would say good piece of advice, pro tip in there, looking at keeping your rents right at or even just a buzz below market value, because tenants will move for a property down the road if they can save $50 or $100 a month. So if you keep your property at just that little bit underneath it, you've got a good opportunity at keeping that tenant there long term, because they will totally move for $100 a month at the end of the day. If they know they can go right down the road or in the same neighborhood and save a little bit, I mean, we all like to save some money. So if you can offer that right up front, and I would say even too, just keeping that rent at that, I would advise for at least a number of years before looking at any kind of rent increases. I mean, certainly market goes up after a number of years anyway, and you can say, hey, Mr. Tenant, you know, we're coming around on a lease renewal, and you can see around you right now, rents have gone up or are averaging about $400 more a month or something like that. So we might need to up that to $300 more a month. You're still saving at the end of the day comparatively, but it just is what it is. It's a good way, I guess, just to keep that long-term tenant in place. Definitely always do your credit background checks. Never accept an excuse on a partial payment. Certainly, we all have hearts at the end of the day, and yet these properties are looked at as purely a business at that point, right? So, and again, that's where it's just nice to have a property manager, because they're going to be just that person that's in, I guess, between you and the tenant, and going to help make sure that your rent is paid at the end of the day. Justin?
Manages their own property.
Yeah, probably.
Well,
Everybody manages their own properties right now. Rock and
I
roll.
manage multifamily, I manage multifamily drugs and addictions and things.
Yeah. You find yourself kind of running into more headaches. I mean, overall,
It's not.
sure.
Yeah,
It's
yeah, if
really
you screen
hard.
hard, then when I had 18 rental properties, single family, I think once they, of course, like I said, I knew the tenants more than just, but I think I spent 10 to 15 hours a month.
But I
Yeah.
think what you just said is you got to screen hard
Sure.
up front. And if you are no nonsense up front, then you get friendlier with them afterwards.
You put those boundaries.
You got to have very strong boundaries.
It's, I've got an assistant that takes the calls out, partner with me. So when something comes in, it's not really a headache.
Yeah.
Yeah, but the team is a key where it takes a 5-minute phone call.
Are you good with this?
Right.
Yes.
Sure.
It takes 30 seconds.
Yeah, so you've built a good system and infrastructure there to kind of help you manage that accordingly. I've seen some people leveraging home warranties, right, that are going to cover some of those major mechanicals and things like that of a home. Understanding, again, that's going to eat into your bottom line, but again, peace of mind is always nice. I'm one that I just leverage that out as much as I can. Just have the home warranty in place. Adrian, you said you manage your own stuff, right?
So it's actually relevant with that. So one thing for people who entrepreneur. I've been doing it 4 years now, and I made sure to always budget for a property manager, even if I don't think I'm gonna have to. Because, like, real life, first time around when I was renting on my very first house, I lost my job when the house was vacant. And so suddenly the priority was getting that house off of my expenses. That's possible.
Yeah.
My job had a property manager come in, take it over. I budgeted the 10% already, so when that hit, it wasn't a big deal. Second time around, the house was vacant. Timing is it's a good luck house. House went vacant, suffered a death in the family. I was worried I was going to start my mom's bills and so on and so forth. Again, they picked up, they got somebody in there, kept going. I'm about to take the house back from them to the point where I can have enough reserves, I have enough ability, I have enough team together. But I've always made sure, regardless, whenever I'm acquiring property, budget for it because you never know what's going to happen down the road. You want to find a hard way to the wall.
Sure. That's a great piece of advice. I like that a lot. Just kind of plan as though they already exist and you won't get caught slipping.
The other thing I would say is if these are not skills you already possess, in fact, get a property manager, watch what they do. Don't just assume all of a sudden I'm going to become a hard-nosed negotiator. If you're a soft touch, you are going to be a soft
You are
touch
going to be, yeah.
with your tenants because they're going to have.
They're gonna give you every story.
Yes, because I am a soft touch, but I'm not a soft touch at work.
Well, I
This
was
is not my money at work.
Well, I was a soft touch until after 3 years of losing thousands of dollars, and they broke me.
Yep. Yeah. Yeah. So I'm a softie as
Yeah.
well. So I just went ahead and like handed that right off. I'm not even, I just know I will buy every excuse in the book there that,
You know what's helped with that too, Cory, is it was cozy. Well, when I signed up, it was cozy, but now I think it's apartments.com, and they are fabulous. The background checks, the credit checks, and I just tell it, if you refuse to go do that, then I can't even talk to you.
sure.
So that's a safeguard between me and them.
That's cozy.
It's apartments.com.
Oh, okay.
They've switched to apartments.com.
That's cool. That's a great little piece of advice.
And it's free to us.
Yep.
Yeah.
Mhm.
Oh, that's cool. That's really good to know. Let's talk about lending. We got a couple loan officers in the room, so they can call BS or not kind of thing. But I'll say most investment property loans typically are going to require about 20-25%. I use 25% in this example. Some will do 15, but overall that's going to be 25. Going to require 25% equity on a purchase price or appraised value. You can have up to 10 properties using those, can be financed using conforming Fannie Mae loans. Pro tip on that, have a spouse, because you can have 10 and they can have 10. That gives you 20. That does not limit you as a married party to just thinking we only can have 10. Put 10 in one person's name, have 10 in the other, and that can get you to 20 without too much hassle. Beyond that, then you'll have to start looking at some maybe commercial loans or some other non-conforming structures of lending in order to do that, maybe packaging it all. I mean, by that point, if you've already hit 10 or more, likely you've already opened yourself up to other options anyway, hard money, or again, commercial loans, non-conventional ways of financing. But for the initial, say 10 properties, would be totally fine when it comes to using conforming loans. Let's say conforming loans usually must be owned personally, not under an LLC and trust. I'd be curious if anybody's been able to pull that off by using that, by just purchasing it right off the bat under an LLC. Okay, perfect. Right, so just under a trust, but not as an LLC, right? Right. Are you purchasing it? That, okay. Sure, I got you. Because I would say like, there is one thing on there when it comes where some people will purchase it under their name and then kind of quit claim it over into their LLC. Certainly that can be done. And yet I would say, just kind of word of caution in that, is in all of your real estate purchasing documents, there is a clause in there which is a due on sale clause, which should a bank or should a lender go look and see that that property has transferred ownership, they could call on that clause and say, hey, we need to be paid for this and you have 90 days to pay us on that. Reality, does that happen? I've not heard of it. Yeah, I would say only if you stop paying at the end of the day. Right, right. As long as I think the banks are getting their money, everything kind of keeps moving on. And yet just be aware that does exist. So just caution. I mean,
Even if it can't happen in real estate, it does.
oh yeah, absolutely. If it can't happen, it totally has happened. Right, someone out there has totally gotten pulled on that. Usually they're going to want to see 6 months principal, interest, taxes, and insurance reserve for each property. And then when it comes to refinancing that, again, other lenders are going to be different, so it's good to talk with them. But for say like a refinance, probably upwards of 70-75% loan to value ratio. And we've got a couple lenders in-house. Yeah. Sounds about right?
That's about right. I was kind of say, like, I'm a lender, I'm gonna take out, but I'm an investor.
Yep.
Different lending institutions, they specialize in different types of products, different types of clientele that they're wanting to attract, which is why you're seeing one set of numbers, another set, because that's just not the portfolio they want to generate. So definitely ask around and make sure.
I would say a good LO who is unafraid to refer you to other people's business. It's unafraid of referrals. Actually, know the way you need to go talk to this bank that's very
Right.
specialized in, or you know, whether it's private or whether it's some of the commercial banks and the small independent banks here. They go talk to this VP and they can maybe look at your whole portfolio. They can look at your business. They can do some creative things because they're going to hold the paper themselves.
Yeah.
When you started, what were you
Yeah.
into? What's the route you took refinancing?
So I use commercial.
Yep.
Typically, I'll take it down with private money. Once I renovate, I do big renovations.
Mhm.
Go to local. Basing it versus you get income debt service.
Yep.
So they're looking at the assets.
Because that LTV that or the refinance.
It typically runs from 70%.
That's good.
And,
Yeah.
and they factor in that actual property along with the local rental. So, if it's all a little bit, they'll give and take.
Sure. That's cool. I guess that's just part of having that relationship with that lender directly to say, well, they'll move
So,
and
yeah,
have some
if the
wiggle and
appraisal
not.
comes in and it's below what you were expecting, and your local debt service coverage ratio is still really good, they'll bump their LTV.
Steven, are you doing more like acquisition or you have some clients who just need the long-term financing?
Oddly enough, I do some long term, it's not always my preference, but, so I run two types of money, I run my own money, I have one institution out of California that I run. They don't utilize anybody else's growth at this point, so I don't want heads with anybody, nobody else is having access to them outside of the state. They're very reasonable the way they work, but they, just like everybody else, somewhat institutional, they're cookie cutter. They don't get outside the box. With my money, I get outside the box. So I'll give you a couple of examples. Somebody in town here owns a marina. They needed to do an expansion on the marina. In that case, I would basically give them anything he needed and everything he asked for, because the marina has such a high value. I don't care about his credit. I don't care about anything else. And I don't care that he needed the money for 6 years, because that's how he wanted to pay it down. It's just an easy deal for me. And he had bad experience dealing with the banks. There are two bank liens, not liens that he was in the rears of, but liens that had to be taken care of. So I took care of that. Long story short, like that's a 6-year deal. I have a deal like that in Florida. There was a woman that owned, funny, it's not like I know anything about the boating business,
Right.
but she happened to be in charter boat business, and she had a couple of rental properties that she was willing to cross-collateralize. Those properties at the time were worth about 500 and change. Now they're probably worth 17 million in the last 2 years.
Right.
The way property- But she
Right.
paid $300,000 for her boating business. Now, would I invest in her boating business? No shot.
Right.
But those properties are fine, I'm
Sure.
safe, and she needed the money for 3 years. So I'll do things like that, but the institutional money will not do that.
Right.
So I try to keep my money on the side, but
That's cool.
I don't know if I answered. the question.
No, it did. Yeah, no, that was good for sure. That was cool. Well, let's do, we'll kind of do a little deep dive on a property. So we'll kind of look at a sample rental deal. We've got a $250,000 townhouse that needs about 10K worth of work to be able to rent for $1,750 a month. We're going to assume there's an HOA on it, being a townhouse of $75 a month. The tenant's going to be responsible for utilities. Property tax is going to be about $4,000 a year, about $1,200 a year for insurance. We're going to kind of look into see how these numbers may or may not make sense on it all. So we're going to assume, right, we've got a 75% loan to value loan at 5% interest for a 30-year note. We're going to assume we're going to take $1,000 a year in lost rent due to some tenant turnover there. We've got $1,000 a year in any repairs. Likely that is going to be higher on your turnover year, because if you can find a person that's going to be able to say recarpet and repaint a place for $1,000 bucks, please let me know. I would love to know that person's contact info right now. You are going to get some depreciation on your taxes, loan payoff, price appreciation on the property. They are factors, yet when we're analyzing deals, that's cherry on top. That's not real when we're actually trying to see if this is a good deal for me to invest in at the end of the day. So to get into this deal, you're going to need about 70 grand in equity between your 25% down and about 6 months reserves. Because I think if I do that math in my head, that's about 62 on 250,000, 25%. You're looking at like 62 grand, 62.5. So then plus some extra to cover your reserves. Your monthly cost about $1,000 a month mortgage, $400 a month towards your taxes, $100 for insurance, $75 HOA. That's $1,575 a month. Total gross will be $18,900 per year if you do not use a property manager. If you do, then you're going to be looking at an additional $126 a month or $1,500 a year for total costs of about $20,400. So you take your income, $1,750 a month, or it's $21,000 a year minus your $2,000 of lost rent and repairs, bringing you an actual income of $19,000, and actually a net loss if you're using a property management in that case. Best case scenario with no turnover and repairs, self-managed, you result in a net profit of $2,000 a year or 2.8% return on your 70 grand. Say you had the $250,000 just outright and you just wanted to dump cash into this whole deal. Your profit would be about $14,000 a year or 5.6% return on your money. Is that a good deal? I don't know. Probably, I would say probably not. I mean, I would also say if you got 250K to go throw into something, I would advise just leveraging that out amongst a couple of properties that are going to yield you a better return on your money.
Could be a good deal if you're not focused on cash.
Sure.
If you're at a place where you've got cash flow and now it's about long-term wealth creation, tax avoidance, then I've seen people take very low margins.
Yeah. To kind of,
it makes sense for them because it's a long-term play with the depreciation.
right.
You know, so maybe they're buying in West Knoxville, A-rated school district, and they know it's going to get long-term rentals or rent. You're going to get corporate executives here that don't want to purchase. They're going to have to move in 2 years. I've seen people do that.
Sure.
Who are pretty seasoned investors.
Yeah.
But yeah.
Typically,
deals we
no.
like.
Right. Typically, that's not the deals we like. And yet you're right. For some people that might make total sense because they might be looking to put some money away from taxes, or they're just hedging their bets 30 years down the road that this property is really going to return for me long term. So just some kind of things to think about when you're looking at your margins and breaking down a property. Owning individual properties as rentals is certainly a long-term game. We've kind of established that. We like to buy rentals ideally close to 100x the monthly rate. That's kind of the 1% rule. So if you're spending $100,000 on your property, ideally you're getting $1,000 a month on your rent. This can be difficult to do in an up market. Certainly one that we're in right now.
That's a gross number.
Correct. That's not going to be on your net. That's just going to be a total gross number. That can be difficult to do depending on what market you're in. I mean, in our market, you can still find these deals. We're still fortunate enough to be I mean, we've seen a lot of appreciation, but there's a lot of great industry around the area that continues just to bring people in to the university. Well, rents have not gone down. I've never been in a position when I was ever a renter where the landlord came to me and said, Cory, guess what? rent's going to be going down $50 a month next year. How do you feel about that? Like, doesn't, right? So you're going to see that continual growth annually, semi-annually. But again, it just depends on where you want to go, right? Because some people can look in truly Midwest in Kansas or Central Ohio, and those margins might be a lot better, or you might be up in the Northeast and your numbers might look kind of similar to this, where the spread's not so big. We're fortunate enough to still be in a market where you can likely see that
But in those
1%
places,
or
your
more.
appreciation would be within the 4%.
Correct. Yeah, your appreciation is going to continue to go up, especially around those larger metro areas like a DC. Yeah, you're going to see that overall. We've seen pretty steady appreciation though year over year until the last year, and then it just hockey sticked. Yeah, and went way up. I'd say a deal that makes good cash flow as a rental will also be a good candidate for a fix and flip. So if you have a backup plan that doesn't work out, I would say the thing on that is don't look at it the opposite way. Don't look at it as a property that you're flipping, and the numbers might not always make sense to think that, okay, my exit on this, if I don't sell it as a flip, I'm just going to rent it. Those margins might not be there for what you're looking for at the end of the day. So just start beginning with the end in mind. Numbers for loans is essentially the same for buying a multi-unit apartment building. Getting a loan can be easier with the single house. You often add value, raise rents with property improvements. Overall, just any kind of questions, thoughts, comments, queries. I kind of want to open up for a little discussion here in-house.
What's everyone